evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 14th of December, 2020. You realize pretty soon I'm going to be saying 2021. Wow. It's just after 6 p.m., by the way. Hard to believe. So we're coming to the end of a year, so you got to start thinking about year-end trading, where the markets are going to be, things of that nature. I doubt people are going anywhere like the regular year because of the COVID-19 situation. It's going to explode even worse in the U.S. How do I know it? Look at Europe. You've just closed Germany, England. I can go Netherlands, they're about to shut down. It's one place after the other, and these are full shut-ins that are happening. And do you think we're that far away? I don't. And you got to be very careful. I was watching the Gator basketball game, and that player, unfortunately, that fainted. My heart stopped. I mean, I couldn't believe it. And then I heard he had COVID. I wonder if that caused an issue. You know, we're all scared of this. Tonight, Attorney General Barr resigned. The president accepted his resignation. He's been a staunch defender of President Trump. He might have said he didn't see any enough fraud to overturn the vote for the election. The Electoral College put Mr. Biden, President-elect Biden, over the hump. I think for all purposes, for even you diehards, the game is over. It's going to be President Biden come January. Then we have the FOMC meeting coming up. That takes place starting tomorrow with the announcement at 1 o'clock on Wednesday, and then the press conference after that. And there's a lot of other economic data all week. Something like 16 central banks coming out this week with their monetary policy. So it's a big deal. The line in the sand seems to be drawn on our Fed as to whether he tweaks or doesn't tweak. Is he going to tweak part of the $80 billion that he buys monthly and then the $40 billion in mortgage securities? Is he going to do that or just sit pat? Those are the two elements. We're going to find out what it means. As I take a look at the S&P, we're drifting right here. We haven't gone back up for the highs, and we're not getting away from those highs. I still expect the Santa Claus rally right at the last part, so that hasn't changed in my opinion. As you look at the market, you know, we're digesting. We've had another run to the upside, and now the market is sort of getting that congestion going in it. As for a trend, we have a higher high and then a lower low. There is no trend there. When you look at where the market's fallen back to, I call the red line, the 18-day moving average of closes, the line in the sand. And if you take my charting course, you hear me harp that over and over. Chartists like neutral points on a chart. This is one of them that you work with. And you can say to me, it's the 18, the 20, the 21. Do you think it really matters, those few points? You're going to be in the ballpark. I like the 18. The next thing I look at are, where are the Bollinger Bands? Bollinger Bands, you got to think of them this way. A strong fence that tries to keep the price within it there, and strong support to try to keep the market from getting through it there. Will it get through? Of course, at times, but only 5% of the time will it stay out of the band. So that's very, very important. And it depends if the band's narrow or wider. I explain that in my charting course, and in fact today I started laying out my new mini course on just Bollinger Bands, the mini course on slow stochastics as well, and outside days. So I'm starting to lay them out because I'm going to start recording mini courses on them for people that are just interested in that. There'll be a charge for it, but I'll give you my thoughts on it in my mini course. So as I look at the market, I see neutrality and momentum turning down, and the market's already gone to the 18-day average. I'm about as neutral as you can get in that market. In the NASDAQ, you lost your embedded reading, and when you did it, you fell right back to the 18-day average. Now, embedded simply means this, folks. When you've got the red and the blue lines, they're called K and D, and one of them gets back under 80. After going sideways for a while, if it doesn't regroup right away, and I mean right away when the market reopens, the odds favor the price is going to go to the 18-day average. In this case, it did it all on the same day. Not much you can make out of that. And the market hit it and it's just sort of bouncing. Are we trending? No. You have a higher high and a lower low. Again, very interesting that this market went flat in front of the FOMC meeting. The Dow, flat in front of the FOMC meeting. You went up today, made a challenge of the 302.40 level. Didn't quite get to the upper Bollinger Band, that's 30271, but you backed off, and tonight probably challenging this number. Again, the lost embedded reading. The only market that hasn't lost the embedded reading has been the Russell. And you can see the chart pictures totally different as the market's staying very strong. If it loses it, I will look for a challenge of the 18-day average. But it hasn't lost it, which means until it's lost, the pros are still, in my opinion, buying the market. Where did we go on Friday? We went up to the upper Bollinger Band. Where does the market normally fail? Remember what we just talked about, the fence, the resistance point. And the market right back down to the 18-day average. Then the market reverts course, and today closes right over that band. Now, if it continues up, it means stock indices down, typically, and I'd look for resistance at 25.77. This is the first close outside of that band in a very long time. You'd have to go back into the October time frame over here, October-November time frame, and that's okay. Doesn't mean too much to me just yet. T-bond market, I would say this market wants to hang around the 18-day average. I'm laughing because you go neutral so often in front of these government reports, and you're just hanging at the 18-day average. The swing line is up. Prices are trying to stay over that number. The risk is to get back under this to neutralize the chart. So I'm going to give the bulls the edge in the market until it proves different. In the 10-year notes, same thing, higher lows. We don't know, obviously, on today's action if that'll keep this pattern, but we have these two in place, and we have the higher high. I also have a very overbought market, not interested in anything there. March dollar index. We had done December's before this. Time to move to your March currencies. And you can see you got the lower highs, lower lows. When we reopen tonight, are you going to lose the embedded reading? You've been losing it, gaining it back, losing it, gaining it back, one day at a time. It's flirting back and forth with what it wants to next do. In the eurocurrency, we still have the fully embedded reading in the March, and this first time you're seeing the March. Higher lows, higher highs. Lose that reading, and I think you go to the 18-day average. Don't lose it, which it hasn't done. I think the pros are still buying, looking to see if they can drive the market to 122.84. But do the pros really want to take much of a position right in front of the FOMC and these other central banks? I don't know. I know how I traded that, and if you get my full research, I tell you that, but I'm not one to stand on a train track with a bullet train racing to see can I jump left or right in time. This is futures. This isn't investing. This is trading. That's what futures are about. Remember that. In the British pound, lower highs, lower lows. I'm still in the minority of people that think the deal will get done, although a big shift after Sunday came and went, and there's two sides are still talking. So I would say there was an 80% chance of a no deal is what I was reading in the news, and now I'll bet that those down to 60% or something. I'm going to stay just the way I am. I think Europe just waits to the last minute to make a deal, and I don't see why both sides can't agree to something. They need each other. This is foolish. I think they're going to get one done, but that's just me. Would I recommend trading into that? Absolutely not. Bitcoin ended its downtrend. So what you had here was a market that was breaking down momentum-wise. Would it get to the lower Bollinger Band? But if it takes out this high of Thursday, be careful. And that's what it did. So now you're out of a trend. You have a lower low, higher high, no trend. That correction phase is over, but you haven't started, at least on this chart, a definable uptrend. When we step over to the crude oil prices, very, very overbought. And again, OPEC comes out and lowers its projection for demand in 2021 on, I think it was 363 barrels a day. Normally you'd say that's bearish. Well, it's not quite what happened. The market went up on the news. This has been wild. This market is all enamored, I think, with COVID-19 vaccines. And it is saying, I know we have supplies. I know there's going to be more U.S. oil, Ecuadorian oil. I can go on and on. They made their list today of who they think is going to produce more oil. But the market's not breaking on the news. Very interesting, and staying with an embedded reading. Markets don't respond to bear news or bull markets until they're not. Lose the embedded reading, I'll change my opinion. I'm still in the bull camp. WTI crude, still in the bull camp. I don't know if you'll lose the reading or not. You've kept it so far. March heating oil, higher lows, higher highs, fully embedded reading. Why not the upper Bollinger Band? I think the pros are buying on these dips and pumping out on the upside. And we finally got where I thought you were going to go. It's going to be 12 inches of snow in New York. Guess what natural gas did? You know, I don't want to be a weatherman, but I laugh at it because a little bit of experience goes a long way, my friends. And when you get like this and you haven't had your first real cold weather, we're 33 in Chicago as our high today. That's cold weather. Everybody's turning on their heaters now. You know, it's just a question of when December would come. So now the market's gone up to that number and just sort of hanging there. But you're out of the downtrend. And to me, that's what's important. And what I just said, so important. What I offer is something you don't get often. I became a registered broker in futures in 1969. That's a heck of a long time, right? And I've learned from some of the best pros in the business. I've had opportunities that people dream of to meet great chartists and great names in the industry and learn from them, not just a handshake. Very fortunate. I bring that to you in my subscriber videos. Each morning, I start recording at 5:40 a.m. and I tell you in the futures video what's going on in Asia, what's going on in Europe, what's going on in America, if there's something to talk about in the news section. Then from there, we go into the charting section. Now, you can watch the charts on our website. That's where I strongly recommend you do it because we have all the bells and whistles on our video there. We still have the videos on our mobile app and on tablets. Tablets are just, you can go to the website, so that works great. For the mobile app, you don't get to have that scroll bar that I put, and I'll talk about that in just a minute with you. But let's talk about what I'm saying. So I'm trying to cover every morning for you 40 charts with news in a certain order. The reason for the order is I want you to get used to how I cover the markets. And let's assume you just wanted to go to metals. You just grab the scroll bar on the bottom, and in big letters, it tells you right where you're at, let go, you're right there. I'm going to cover daily charts primarily. I'm talking on the week, mostly what I call swing trades. A swing trade, by the way, is not a day trade. The only time I typically have a day trade on, I'm instantly wrong, or the market just goes to the objective, which is not typically the case, but it happens. Other than that, I'm looking for a trade that'll build on itself. That's called a swing trade. A longer term trade is typically off weekly charts. I do a weekly chart video over the weekend. And all of this is covered just on weekly charts, 40 charts, specific buy and sell recommendations there. While I've got my Cyber Week going on that ends this week, anyone that buys a 1-year subscription to this or any of my products, this one happens to be $156 for the year. You get my full charting course for free. That includes the $80 software. That includes the software for the charting, by the way. That includes access to my written updates if you haven't had those. Obviously, the video that you buy, including the morning video. Whatever you want to do in there, it's yours. And you can give that charting course either away or use it yourself. You tell us when to begin it. I'm going to end it this week. It's coming sooner rather than later. We've really done a knockout job on them. And there's a point where the staff is just saying, okay, it's done. We've got the mass of the people we want and we're fine. So it's ending. How do you find out about what we do? Just go to our website under the word research. It's all there. You can call my staff. They'll work with you. Again, $156 for this, say. You're going to see what my traders see for a month in the written updates. That's a $60 value. The charting software is about an $80 value for 30 days. And then 6 hours of videos. What do you think that's worth? I think we're one of the best deals on the street. It's Cyber Week for me, ending. You have a great weekend. Hope you take advantage of this, and I'll see you tomorrow.